And of course, at this point of time, ladies and gentlemen, our next speaker is Mr. Scott Picken, the CEO and founder of Wealth Migrate Inc. He runs 4 successful companies and is passionate about global business, international property, sales and marketing. Besides his business achievement, he is also the co-author of the book Property Going Global. So the title of his talk today is Global Real Estate System, your answer to safely investing in the best real estate opportunities and partnering with the best globally. So ladies and gentlemen, please give a big round of applause for Mr. Picken. Mr. Picken, please. Thank you.
Good morning to all of you. Can you hear me if I don't talk with the mic? Yes? Okay. I want to say thank you very much to Mr. Getigo for putting on this event. It's absolutely fantastic. It's our first time to Asia to talk about crowdfunding, and it's so exciting that you guys have embraced it. It's really, really hard to follow after Mr. Francisco, because, you know, when you speak to the legal guys, they always tell us what we're not allowed to do. And I know that myself and Mr. Getigo, we're excited, we're passionate, we know what's possible. But I will say that at 2 p.m. yesterday afternoon, we were in his office to understand the legal ramifications so that we could be compliant. And we've also got Jennifer here, who's our partner from America, and one of the top authorities out of the US in terms of SEC compliance. And my intention would obviously be for the two of them to talk, because at the end of the day with this game, like you so rightly said, if you don't get the compliance right, the rest can all fall apart at a later stage. So with that in order, let me start off and just explain. I want to share a little video with you which might show you a bit of my passion about who I am and what I want to go on about.
Every single person has their own parameters, has what they're trying to achieve in their life. They have what's important for them and their family and their future. And based on those parameters, it will help you make the right decisions for you and your family.
But that whole saying, a fair phone, you're goed, now on your Skoda, you know, if it's a long way away from your heart, you're going to lose it. But to be honest, you know, those days are gone. That's 20th century. If you're not thinking globally, if you're not chasing the globe for the best returns, you're in the 20th century. It's very simple.
But with regards to international investment, you said this morning that it's vital to have someone on the ground, otherwise you're pretty much destined for failure. If you're investing internationally.
I didn't say pretty much, I said investment.
And you know, considering the rand has lost 26% from the 1st of January, and it's actually more now, considering what's happened in the last couple of days, you know, I'm sorry, but the blatant truth is, if you've got all your assets in rand, you're 26% poorer.
It does come down to the numbers. If you live in Joburg, I would say get your first investment property in Joburg. Probably get your second one there. You've got to cut your teeth on it. You've got to learn the ropes. You've got to learn what it takes to be able to invest.
One of the most important keys to success, owning a lot of companies, it's about hedging and diversifying, and that's what it's about.
Clem Santa, if anyone's been to any of his talks, has 4 different scenarios for the global economy. Then he has 3 different scenarios for the South African economy, which encompasses Africa as well.
The economies are different, the customers are different, the people are different, and you can't possibly understand what's going on in a different culture if you're not there on a regular basis. The ones that are there on a regular basis, if you trust them and your partner, then you're going to be all right.
Yeah, which is precisely Chantal Ogre's point, which is that scenario planning is just daydreaming. You've got to connect the dots. You've got to have the flags, have the probabilities, look at the best strategy for each scenario, and then come out with a balanced picture.
Could you maybe give us some more insight on where people should be looking? I believe you've just written a book on this with Clem Center, so share your insights on that.
Look, what we did is we built a 4-dimensional model where we took his theory and we gave people a system, a formula called the GPS system, the global property system. You can use Clem's scenarios, you can use the kind of the understanding, and then you can rate your factors in terms of risk, pros and cons, and you can ultimately decide, you know, where the better place places are to invest.
But if you've got 10 properties in Joburg and you're looking at buying an 11th, I for one would say don't buy it in Joburg. Buy it in Cape Town, go to Port Elizabeth, go to Durban, go to anywhere else. And once you've got a few more, I would even say it's time to think about going global.
As a result of the scenarios, and I have to congratulate you. I think this graph does exactly that.
I just love entrepreneurship and entrepreneurs. And I'm here with Scott Picken, who's one of the top property experts, offshore property experts in all of South Africa.
I was skeptical. I sat down with him and his partners. I'm a true believer. His book is phenomenal.
He's even written the book. When I say someone's written the book, I usually mean they're good at it. But he's literally written the book on going global.
Because there's so many factors to take into account. There's the variables of which country has the best value in terms of price probability. Where are you getting the best yields? Where is the rule of law the best?
So you've got to talk to them. You got to sit down with them. Without talking to, we do a disservice to you and your business.
Property going global. Systematic and scientific formulas. 2013, we got returns of 41.41%, a minimum for all our investors. That is why this book is the authority on international property investment.
Can I see a show of hands in the room, please? Who here believes that partnering is the way to a successful business? Who here thinks that it's better to do it on your own? A couple of people. So I'll share with you a little bit about myself and my philosophy and why we do what we do. I would say to you, basically, Nelson Mandela said, money won't create success, the freedom to make it will. Now, I've got two very stark contrasts. The one is my father. My father always wanted to be an entrepreneur, but he did the right thing. He was a corporate man. He worked until the age of 49, and then he finally went on his own. He took early retirement, and he got paid out his pension. And 10 years later, when he died, my mother got his capital back minus 10%. Now, you know that the financial planners of the world were making a lot of money. I did a study in 2005, 10 years after my father passed away, when my father passed away. If my parents in South Africa just bought 5 properties at a 40% loan to value, 10 years later, my mother, rather than getting negative money, would have actually had an net income of $10,000 a year and a net asset value of $270,000. Today, 18 years later, she would have a net income of $200,000 per year and a net asset value of $535,000. Very simple. Same money, put into financial planning hands, same money, buying 5 standard properties. And from a very young age, I decided there was absolutely no ways that I was going to follow that route. My uncle, on the other hand, was an entrepreneur from a young age. He learned to invest, and that's all he did. But he did something very different. And I understand that a lot of people in Asia have a lot of concerns and thought processes similar to people in Africa. They're great opportunities. You love living here. But you would like to have the freedom to necessarily send your children to the best universities in the world. You'd like to have the freedom, should you want to go and live anywhere in the world, to be able to do that. And what my uncle did at the age of 30 was he made a decision to open an offshore bank account, and for some of the income that he earned locally, he invested some of the income offshore. 23 years later, he decided he wanted to move to Australia. Now, if any of you have been to Australia, you'll know that at the age of 53, it's very difficult to get into Australia. In fact, the only way to get in is to buy your way in. At the age of 53, he invested the $1 million, he bought his way in. He bought a house for $1.8 million. He went to, his son went to one of the best private schools in Brisbane. And I always joke, but one of the greatest things he did was he retired and didn't have to work for an Australian. And what I mean by that is that it gave him the freedom. And so I decided at a very, very young age that I wanted to follow that. And I wanted to follow it in real estate. I did my very first project when I was 13 years old. I actually convinced my parents that I needed a bedroom and I didn't want to share with my brother. And so we designed it and we built an entire bedroom bathroom en suite. Now, you've got to love the self-belief some parents give you. I'm sure there was an architect and a project manager involved, but I still believe I did it myself. At 22, I did my first development. I bought this property internationally. It was a house, and I developed it into 6 townhouses. At 24, I did my first property in London. It was a 3-bedroom townhouse. This is in Wimbledon. It's very seldom in London that you get as much space as this. And what we did is we put £20,000 conservatory on, turned it into a 5-bedroom property, and in the space of never once since 2002 have I earned less than £1,000 passive income on that property. Now, I learned a very big lesson there, because we just had 2001, and all my friends told me, well, the market's going, you know, we're going to have, just after September 11th, we're going to have war with Afghanistan, oil prices are going to go up, interest rates are going to go up, and you're going to fail. I said, no. I'd read Dr. Dolph DeRosa's book, actually, back when I was 19. I said, if you create value in a property, then you control the risk. So this property, by turning it from a 3-bedroom into a 5-bedroom, I immediately doubled or even tripled my safety margin by over £1,000. And as I said to you, most of my friends waited until 2007. They said the market was going to crash for 5 years, and they waited. And what happened in 2008? So at the age of 26, I decided I was tired of working for someone else. I'd been doing all those projects on the side. I'd worked for an Irish developer in London. I lived in London for 9 years. And I decided to start my own company. Since then, we've done thousands of South African investments. We've done hundreds of London and UK investments. We've done hundreds of Australian investments. Interestingly enough, in Australia in 2009, we started with $4 million. We turned it into $40 million in 4.5 years. That company today is now listed on the Australian Stock Exchange. And in 2012, I'd been to America in 2010. I just couldn't find partners on the ground that we could trust. In 2012, I went back. It's actually when I met up with Dr. DeRosa again. And we found partners that we could trust. And we took our business model, and I'm going to share it with you a little bit later, that we'd used in Australia so successfully, and we implemented it in America. And we've now done hundreds of opportunities in America as well. A lot of people will say, well, it looks like it's all residential. It certainly started off in residential, but we've migrated, and certainly a number of my partners are very, very strong, and we do a lot in the commercial space and in the industrial space. So it's residential, commercial, and industrial. In terms of the accreditation and recognition, this is specifically for Mr. Francisco, just to make sure that I am approved. But we were the very first company to be invited onto the Association of International Property Professionals. I would suggest you look for that badge. Doesn't matter where you are in the world. That badge is based out of London, and it basically regulates all international property professionals. We won the award by the Overseas Property Professionals in 2007 as the best company out of Africa. And in 2012, I was accredited with CRS, which is one of the top accreditations out of the US. But I don't really speak too much for accreditations because I don't think they count for a hell of a lot. What I think you should be based on is your results and your track record. Our team that we've put together at Wealth Migrate has done 227 years of international real estate. We've done 10,779 deals. We've done 1.32 billion US dollars of investment on 5 different continents. And the big thing that I believe the difference between crowdfunding and those that are going to make it and those that are going to fail, I believe the biggest risk in the space is that it's all very exciting right now. And everyone wants to participate. And just like you mentioned, you know, the problem is what happens when things go wrong. And anyone that's been in business for more than about 12 months understands that things go wrong. Anyone that's bought a property before understands that things go wrong. And so the question is, what happens next? And I learned a very, very good lesson from a billionaire in South Africa in 2009. He said to me that even turkeys can fly in a hurricane. Now think about that. Even turkeys, even chickens can fly in a hurricane. And the logic behind it is that when the market's rising, everyone looks clever. But when the market turns, that's when you realize who knows what they're doing and who doesn't. And one of the things that worries me about crowdfunding at the moment is that the majority of people, and even a lot of them that Mr. Getty Go put up on the board up there, a lot of the big ones, the average age of the person running the site is less than 30. They probably weren't in business when we had a thing called the global financial crisis. And so the challenge comes is, what do you do when things go wrong? Dr. DeRoos alluded to some of the books we've written. We don't make money, or we don't try and make money. Our intention is not to be in education, but it's to facilitate and help people make educated and informed decisions. That is why we wanted to create the global real estate marketplace. We've been investing overseas for a long time, but with the advent of crowdfunding, it gets so much more exciting because you've got so much more access to information. You've got accessibility to efficiencies. And that is what is changing the game and what we are so excited about. But also what I think is very important is compliance. And we were very chuffed, and Jennifer and her team were wonderful in helping us with this. But in terms of getting our SEC compliance through, which just as a matter of interest, Singapore's GDP is about 0.34%, and your net wealth in the world is about 0.46%. The US is 22.4% GDP and 29% of the world's wealth. And a lot of people around the world, a lot of the compliance agencies are working with the SEC out of America. And they are one of the forefront leaders in terms of what's happening in this crowdfunding space. And so we were chuffed to get our certificate from the biggest one worldwide. Our business model, a lot of people try and confuse things. Our business model is very simple. It's two things. It's information and it's partners. If you have the right information and you deal with the right partners, the chances are you will succeed. If one of those are wrong, you will fail. So what do we do in terms of information and in partners? It's all about systems. And I want to run through, and today I'm going to just go over it briefly, but I want to run through just some of the systems that we use in both those spheres. Who here knows what CPI is? Perfect. Consumer Price Index. Who here knows what the Global Wealth Index is? So for someone who lives in Singapore, it's not that relevant because your currency has actually been strengthening against other currencies for many years. Where I come from, my country lost 24.08% against the US dollar just last year. My business partner, a billionaire, said that all the wealth that he had accumulated over 30 years, everything that he hadn't earned and he didn't have overseas, he lost a quarter of it in 12 months. That's the impact of currency. It works both ways. So we created the Global Wealth Index so that you can decide, because a lot of people use gut feel. Should I invest in America, England, Australia, Indonesia? But what about the currency? What about the impact that that has? I did it for you 2 nights ago. Your Global Wealth Index over the last 30 years, your global wealth has declined by roughly 1.42% compounded for the last 30 years, or a straight line of about 5%. It's fairly negligible. I wouldn't be too worried about it in terms of the big picture. To put it in comparison, South Africa has declined by 29% year on year for 30 years. We like to only partner with the best. This gentleman, you might or might not heard of him, Clem Santa. He's based out of, he's actually from England. He lives in South Africa, and he's an Oxford graduate. But very interesting, he's recognized worldwide as one of the top 5 leading scenario and strategy planners. Go and Google him, Clem Santa. That book, Mind of the Fox, actually comes up higher than some of the other foxes out there in the world. And what I did with him was that he talks about 4 scenarios for the globe and the global economy. And what he does is he then rates whether the probabilities of whether they're going to take place. Now, my opinion when it comes to investing is I don't like to guess. I like to have a plan A, a plan B, a plan C, and a plan D, just in case the first 3 plans didn't come off. So I wrote a book, and I did all the modeling with Clem Santa to take his scenario planning and turn it into a system that we could use as to where the best places in the world were to invest. It's been endorsed by a few people around the world. In very simple terms, he explains it as flags. As an example, in 1989, he spoke to a gentleman, and they said that Japanese golf players, the memberships in the golf clubs were declining dramatically. And he said, what impact does that have? And he said, well, within 6 months, we see that the Japanese economy is going to start to slow down dramatically. Now, was that a good flag or a bad flag? Pardon? It was a good flag. 24 years later, they are still struggling from the recession they went into. So it's these flags that we use. I'm not going to bore you with all the details, but I've done the 4-dimensional model just last night to see where Singapore sits. And at the moment, if you compare Singapore with the US, the UK, and Australia, currently Singapore is second behind the US, Australia is third, and the UK is fourth in terms of where the best places are to invest. Now, it's a model. You can plug the numbers, and it'll give you the results. It also gives you what are the best things to invest in based on the 4 scenarios. Whether you should invest in the stock market, property, the bank, gold, and other asset classes. All this does is it helps you decide, based on the different probabilities, what you should or shouldn't do. Now, I want to share with you something, just in my interest. Which is the best country in the world to invest in? Singapore. Everyone, who thinks Singapore? Okay, can I see a show of hands? Who thinks somewhere else, just in my interest? Any other name? Anyway? Okay, well, I'll tell you what, guys. The reason most people lose money in investment is they use their gut feel. Let me show you the most sophisticated research there is on the planet. So just while this is coming up, this is, I can give access to all of you to look at this. And let's just, for simplicity's sake, compare Singapore, Australia, Britain, and the United States. Now, they've got the top 20 markets worldwide. This is from The Economist, and it's done for the last 20 or 30 years. It's the most research ever in one place if you want to be able to analyze the different property markets. Now, just in my interest, if you look at this graph, which country is the most undervalued, the best purchasing at the moment? It's the US. Okay? What about Singapore? There's Singapore. You've got Australia, and you've got Britain. Now, people keep asking me, Scott, but you own properties in England. You lived in England for 9 years. Why are you not investing in England right now? I can show you based on the graphs in terms of where we are. Let's look at prices in real terms. Look up there, ladies and gentlemen. What about prices against average income? Prices against rents? What about percentage change? And just in my interest, because I don't like to use gut feel, let's just say, well, I'm not sure, maybe I should invest in Hong Kong. Well, the research doesn't go back as far for Hong Kong, but boom, suddenly you can add Hong Kong in the mix. It's live, it's interactive, and it's available to every single one of you. So, what does this mean to you? Well, the bottom line is we used all these stats and we created the global property system, which is based on the fundamentals of property. Now, property markets change, property information changes, but the fundamentals never change. Can we agree that? So, if you take the probabilities, the highs and lows right now, and it won't be like this forever, but it's like this at the moment. The US is the only country sitting in high return, low risk. Australia is sitting in low return, low risk. Singapore is in low return, low risk. The UK is bridging between low return, low risk and low return, high risk. And some of the other countries are all sitting in the low return, high risk. South Africa, where I come from, high return, high risk. If you know what you're doing, there's good opportunities. But there's also a lot of risk. And I could go into all the details in terms of the spreadsheets. And if you want to, I can share them with you outside. And there's a whole 3 chapters written in the book about it. But the most important thing is it goes into the fundamentals of economic growth and economic risk. Population growth, supply and demand, rule of law, and most importantly, whether you're buying a share or a property, if you're buying something at below market value, can you agree that it's a lot less risky than buying it at the top of the market? Yes? So it takes that into account. It also takes into account your income versus your capital growth. But most experienced investors will know that if you focus on income, you will not only survive, you will thrive. And if you focus on capital growth, it's only a matter of time until you bet against winter, and winter arrives. So we work on a 70-30 rating, with income having 70 over the capital growth. So just a couple of the systems. I've shown you the Global Wealth Index. I've shown you the Global Property System. I showed Mr. Francisco yesterday. We work with Grant Thornton worldwide, top 5 accounting firm worldwide, to work on our tax and structuring. A lot of people think that buying a property is about buying the property. It's actually the tax, the structuring, and the compliance that counts for at least 1/3 of the entire transaction. We've got an entire system based on the different countries as to where you have to invest and what you have to do. We've got a partnering system. I know that a number of people here have experienced a company in Brazil that does affordable housing. Now, interesting enough, affordable housing is something that we know really well in South Africa. We went to Brazil over 12 months ago, and that particular company didn't pass our partnership test. To this day, we have not invested with them. We love to talk about it with a pig and a chicken. At breakfast, who is more committed at breakfast? The pig or the chicken? Why is the pig more committed? Exactly, the pig is the sausage. They are much more committed. So what tends to happen in international real estate is that you come along with all your money, and the person you meet on the other side of the border, he's going to do all the work. You take all the risk, and if there's some upside, he'll take 50% of the upside. Am I right or wrong? But if it doesn't work, you take 100% of the risk. That's a chicken. They'll still be around tomorrow morning for the next breakfast. We like to work with pigs. Their money must be sitting right next to our money, and it must hurt them as much as it's going to hurt us if the project doesn't work. And that little distinction has been one of the biggest reasons between success and failure for ourselves. Our potential investment index. Once you've actually found the right partner, found the right country, how do you know where to invest in terms of the actual area? Dolph's going to go through this in a lot more detail tomorrow, but he developed a system called the Real Estate Acquisition Program. It's got over 1 million lines of code, and it's one of the most sophisticated systems worldwide in deciding whether one asset is better or worse than another asset. And when you change one of the 27 variables which are included in your internal rate of return, what is the impact that that would have on your investment? Now, can you agree that if you're making decisions with these type of tools, it's going to be a lot better than making gut feel decisions? Yes or no? We've got a post-acquisition due diligence system. It's 142 points. Tomorrow I'm going to go through that in quite a lot more detail when we actually look at some of the opportunities and explain what we do. Because again, it's not, you don't make money later down the line. You make money when you buy. And you most importantly need to make sure you don't make mistakes up front. We've got the real estate asset management system that Dolph again put together to manage the property. We've got our private wealth solution. Most of our clients that invest overseas are high net worth individuals. Just like dealing with a private banker, they like to be looked after. They like to deal with one person right through the process. And then lastly, this is why we got excited about crowdfunding. Because we were doing all 9 steps already, but we wanted to put it onto a portal. We wanted to put it onto a platform. And what we're really excited about is that Jennifer and her team are going to have this live on your mobile phone by the 3rd quarter. Now you can see that I'm the property guy and she's the IT person, and I can see her like shaking her head, and I'm like, no, we're going to make sure this happens. But the point being is our intention, our dream, our vision is that absolutely everything, the access to your information will be on your cell phone. So how does it work? Well, it's very simple. You can send an email, you can select your investments, you can do all your transactions online. I mean, in South Africa, we showed the guys at home how they can actually open a bank account in 6 minutes in the USA, all online. And ultimately, you can manage your entire portfolio online. No more paperwork. Complete trust and transparency. You know what is happening. So where are we investing? Well, we've currently invested on 5 continents. But right at the moment, we choose to invest in the USA. That's where we're putting our capital because we're getting the best returns. And just to give you an example of 3 types of things that I'm currently personally investing in. One is residential houses. One of the best markets in America is Atlanta. It's the #1 market in America. Tomorrow I'll prove it to you with further graphs. So we're buying houses like that for between 100 to 160,000 US. It's between 30 and 40% below replacement cost. So if it costs 100 Sing dollars to to build a house and I can buy it for $60. Would you agree that that's good value? That's what we're buying on the auctions. Net yields of 8 to 9% with 3-year leases and financing in the region of 50 to 80%, depending on the creditworthiness. Now we're doing that directly for clients, but through crowdfunding, we're also now packaging it into 10 packages of 10 houses, which allows people to diversify. The second one is a more sophisticated investment. It's a commercial building. 7 commercial buildings. The greatest thing here is that my partner, Henny Besadenhout, has been doing medical buildings since 1992. He's currently building 14 hospitals in Africa alone. And we met up with Paul, who's based in Atlanta. He's been doing medical for 20 years. And this deal is a $14.5 million deal. There's a $5.6 million capital investment. It's blended across 7 buildings. It's got an 8.1% cap. It's about 8 to 15% below market value. It's 8 doctors that are retiring and are not very financially astute. We've got financing already arranged at 4.5%, 65% loan to value on a 5-year fix. The target return that we're looking to achieve there for the investor is around 14% annually IRR. We're buying the building with 89% occupied, although we've actually already got a lease lined up for the day of transfer, which is happening in 3 weeks for the remaining bit. The blended lease is 5.5 years across the portfolio, and 38% of the tenants are blue chip government tenants on 10-year leases. 2 of the buildings have just signed brand new 10-year leases. And the last one, for those of you that want to be more developers and understand the development game a little bit more, I actually was very interested that you guys understand North Dakota and what's happening in America with the way that they've found oil. There's a massive, massive boom going on there. I mean, the trucks are just phenomenal. And most people are trying to build houses and try and service. You know, they often say in a gold rush, the easiest way to make money is to sell spades. Well, that's what we're doing. We're selling spades. So we're creating small little mini factories that are all the people, all the blue-collar workers that are supporting all the different people that are working on the oil rigs, or manning these big trucks, etc., etc. And we're building with a $1.4 million capital investment, a target return of around 22.9%, and a time frame of around 18 months. We're building out these factory-lets and selling them off and retaining half of them. So, in conclusion, I wrote my dissertation at the age of 21 in 1998. And my synopsis was to take an old industry steeped in tradition and run by many smaller, disparate, and often inefficient operators, and to redefine it through the use of web technology to increase global reach, partnerships, and efficiencies of scale, and provide a one-stop, enhanced, and personalized service to our clients. Now, I know in 2014 that seems fairly obvious, but that was really a passion of mine. And 16 years later, we now have crowdfunding. And I really, really think it is amazing that people now will have access to the best opportunities worldwide, the best partners worldwide, and most importantly, with the best information to make the best decisions. So we created Wealth Migrate during the financial crisis. We created Wealth Migrate in the financial crisis. I partnered with a billionaire called Henny Besadenhout. We called ourselves Wealth Migrate because just like the animals, we believe that your wealth should migrate when it needs to. So why do the birds come south in the winter in the northern hemisphere or go north in the summer? Why would you stay in one place if it's not the best place for you? And most importantly, the laws of nature are that people work together. Henry Ford completely changed the transportation industry by helping the middleman get access to transportation, and we believe that is what's going to happen in real estate. Our goal, our vision, is that 49% of the world's wealth is actually held in real estate. But only 12.9% of the people on the planet actually have access to it. Our goal is to double that to 25% by 2020. And lastly, the 3 values which we operate under are trust, transparency, and our interests being aligned. So, what is the difference? This is the old model. You've got the investor, you've got the property, and you've just got fees all the way through. The new model, you've got the investor, you've got the property, you've got a platform with no fees. Only performance fees after the investor has achieved a return. So, I remind you, the securities SEC, we've got the compliance in place. For those of you interested, if you want to be modern day, we've actually set up a text message. If you text 7333, so 7 and then 4 threes, and you write in invest, we will send you all the information on some of the opportunities that we're currently working on. If you write in partner, so if you're a developer or a partner that would like to work with us, then we'll get hold of you and look at what you're doing. And lastly, if you'd like 3 reports, the 6 things you need to know before you invest offshore. Very, very important. I read a very good article by Mr. Getty Go. Very similar, warning people about what they need to know. And for those of you who want to go global, the 5 things you need to know as well. So if you type in report, you can get that. We've got the PPMs or the private placement memorandums outside if someone would like a copy of it. And we created a special website with the .com.sg, so wealthmigrate.com.sg, which is specifically set up for you guys so that you can understand exactly how to do it, what the legalities are, and what you need to know. And in conclusion, I'd just like to give you a gift. It's such a pleasure to be here. I really thank you guys for your time. Thank you for inviting us. And our vision is to be tomorrow's simple answer for like-minded property investors to create global wealth today. And the only way to do that is if you've got the right information. So for everyone in this room, if you go to that website, propertygoingglobal.com, you will actually get a copy of my book, where we've analyzed 16 different countries around the world. And it can help you make the right decisions as to where you want to invest. Whether you want to invest here or you want to invest overseas, that really doesn't bother us. All that we want you to do is to make the right decisions. Thank you very much. It's been an honor and a privilege.
Thank you, Mr. Picken. And of course, at this point in time, Mr. Picken, please stay on stage as Mr. Gettigo will be presenting a token of appreciation to you. Thank you.